What's up, everybody? Welcome aboard to Trading with Bubba. It is Tuesday, the 23rd of January, and I don't know. I can't tell you. I can't remember when the markets were as quiet as they are. I think what we need is a good old-fashioned ass kicking to bring them down a little bit to get some two-way trade. Basically, the market just kind of grind their way higher. Volume continues to decline. We continue to see a lack of activity. What do you say, Ashwin? And I think when you look here again just look at the declining volume each and every day. Okay, but if we look at at Apple, for example, Apple came down to 180. We told you to sell some put spreads there. Now we're railing. I would sell put spreads up at 195. I think that is, again, right now, the overall trade is to take the best advantage of what the market is offering right now. And right now, the only thing I can see that it's offering is the ability to sell spreads and sell premium, because I don't want to get too involved here. Volatility is light, and it looks like it wants to get lighter. Amazon, very similar, same thing, right? We were down at 145. We got to 155. Look for some retracement. We're always looking for some retracement back to the mean. We're not looking to make any major commitments here, because I don't see the point to make a major play here. I don't think you're putting yourself in the best position if you take a major stand here in markets. I think that what you want to look for is the opportunities that the markets are presenting. Coinbase, again, I would be selling put spreads here. Yeah, this is related to Bitcoin, and we know that Bitcoin's under a little bit of pressure. But at the end of the day, again, we're not worried about 6 weeks from now. We're worried about, in this case, the next 2 days, 3 days. Okay. And again, you want to sell premium in the nearest time frame that you can. Okay. So there's a lot of the zero DTEs, which we'll get to. There's the every other day, which is the IWM. And that's kind of what we're looking for. Meta continues to explode to the upside. Again, it's hard to say to you, sell put spreads here. Call spreads here. But that's what I'd be selling here. But I wouldn't sell them here. I would wait and try to see if it can hit up to like 390. Okay, you want to look at some very specific levels, but we know for sure that it is extremely overbought. Okay, and all we're right now playing, just so you understand, and the conditions that we have now, all we're really playing is overbought, oversold conditions. Okay, because we're not getting enough. Yes, if you were dead right, you could have found some big winners, but you're paying a big premium and a big price to get those winners. And I think that you're making a mistake because of the lack of overall action to the market. Okay, Google, you're up and you're oversold. So again, you want to be a seller of call spreads here. Now, the other thing you want to make sure you do is just because I'm giving you a bunch doesn't mean you want to take a bunch. You want to take what you're comfortable with, understanding the risk that you're taking to make these trades. IWM, okay, you're up at the top end here, but you are only at the mean. So do you really want to be a seller here at the mean where it still has some room to go higher? That's what you look at, and you want to start to widen and narrow out your search here. Microsoft up near the mean. Up near the overbought conditions. Now, one of the other things you got to be careful with coming in now is you've got earnings this week. A lot of these have earnings, so you want to check, like earnings for Microsoft are next week, so you're fine. Okay, for this week. And typically before the earnings seasons, okay, you have you look for steadiness ahead of those things. Okay, so you're a much higher probability when you're selling the week before earnings, because there doesn't figure to be major movement in either direction before an earnings report. Okay, gold is short and silver is short. Okay, that's what I'll tell you to answer your question. Okay, I'll look at the charts if I have time. Nvidia continues to be overbought. Now, just as I told you last week, I was selling call spreads, and I got hammered twice in Nvidia last week. So again, just because it's overbought doesn't mean that it has to come down or that it's not going to continue to get more overbought. There is no time limit on how long things can be overbought or how short, what with the time frame, what a short period. So here, Nvidia has been overbought for basically 2 weeks. Okay, and it can be overbought for another 2 weeks. Go back to Coinbase for a minute. Look at this. It was overbought for 3 months. So again, none of this is gospel. Okay, this is to put you in the best position. The Qs are very overbought. Okay, they're trying to rally right now as we're speaking. In fact, let's see if we get some kind of trade here. Well, while we're hanging out together, maybe I'll do some trading too. Okay, maybe I'll sell some futures. Nothing to do yet. There's not enough volume for me to want to get involved, but I'm keeping an eye on it. Okay, Square is in the middle of nowhere. Nothing really to do. This SPY up at the upper end. So again, remember, all you're trying to do is find places in which you can take advantage of. Tesla, it would be a sell puts, but you got earnings tomorrow. There's no reason for you to get involved in Tesla for tomorrow. Okay, Win, nothing really to do in Win. XBI, nothing really to do here. Zoom, nothing really to do here. So again, and then Netflix has earnings, I think, today, right? Or tomorrow. So there's nothing to do in Netflix. So basically, what you're looking for is you're watching these charts, okay? And, if you're into the futures play, the euro currency is headed south. It is a little bit oversold. It probably will get a little bit of a bounce, okay? Bitcoin is very oversold now. So we've had that big move in Bitcoin to the top, now we're to the bottom. I would expect that at some point down here, Bitcoin will hold, okay? And it would be something to play. Bonds continue to get hammered. They're a little bit oversold. Notes continue to get beat up. They're a little bit oversold. So again, it's something that you look at, and again, you're trying to find. Gold is in middle of consolidation, but in an overall downtrend. Platinum, which is a very thinly traded and virtually, I never recommend trading platinum because it's virtually not enough liquidity. It's great for an individual, but certainly I'd be a buyer. I did buy them at 900 and I'm still holding. Okay. And I think that this is what you have to, start to look when you're looking at different markets. Silver is ugly, but it is very oversold. It is due a little bit of a bounce. Okay. And in the grain markets, they continue to languish and nowhere, although they're a little bit higher today. There's really not much going on and certainly nothing too exciting. So again, what you're trying to recognize and find in these markets are opportunities that show up. And right now, maybe we're going to get a short-term sell in gold here if we get a little bit more volume. Well, it's not going to be enough, right? So the bar is ending now. There really is no trade. So what I'm looking for is a big volume spike and a big price either drop or spike to go ahead and participate. But overall, these markets are extremely slow and really not a ton to do. And I think that's what you have to remember. There's a lot of times in markets that you're better off observing than you are trying to participate. Okay. I think that when you look at the bigger picture, realizing that the markets are open 241 days a year, there is plenty of time to get involved. Okay. And the conditions, the first thing you want to do is you don't want to fight what they call the tape. And the tape would be, looking at an overall pattern. So if we look at an overall stock, and let's take a look at the spiders, for example. Okay. So the spiders are trending higher. So all we see now is a little bit of an overbought, which is why we would sell a 0 DTE call spread. Okay. Just because we are overbought. And the assumption is that it will not continue much further without at least going sideways. Because remember, we don't need the market to go down to make money here. We just don't need it to go up. Okay. We need it to sit still for a while. And that's what you're looking for when you look at these different types of charts and different types of areas. Okay. So all we're waiting for is for a reason to participate. And now here, these are 4-minute charts. These are active trading charts. And right now there is nothing to trade actively. Okay. Because again, I'm not getting the activity that I want to get. So I just have to sit back and wait. And this would be a time, like, for example, today, in about an hour or so, I'll be headed to the poker room because I'm not going to sit here and torture myself watching paint dry. And I think that's an important lesson to learn in the trading world, is that there are times just not to trade. Now I have open positions on. So again, the markets are working for or against me either way when I leave. But the stuff that I have on, I'm not getting out today either way. Okay. All of my long-term decisions are made after the markets are closed and going into the next day, because I don't want to be caught up in any intraday volatility. Okay. I don't want to get caught or trapped in some movements that really aren't actual or factual. But the short-term trading, I think when people try to sit here and short-term trade a market that is really untradeable, they find mirages. They see things in the charts that really don't exist. And I think that's an important thing. We all have an opinion, and I will tell you that all of our opinions are mostly wrong. And I'm talking about all of us, not just you or me, all of us, because again, the markets are going to go wherever they're going to go. They are an inanimate object that is just being driven by order and what they call order and paper flow. Okay. So for us, there is no particular reason to be overly active, because if you blow your brains out now trying to trade an untradeable market, you'll have no capital left when it comes time and the markets get active. Okay. And this is what we're talking about. So again, for me right now, it's looking to sell premium, either call side or put side or iron condors right now on the daily stuff, because again, the expectation of movement is not that much either. Remember, when volatility falls, okay, the amount of movement that is expected falls along with that. Okay. So we don't need to be overly active in a market that is not giving us action or activity to trade. And when you learn that, I think you'll be much comfortable and much happier with your trading, and you will make much more money. And at the other side, on your losses, you will lose less if you learn to be disciplined and hold back instead of forcing trades. I mean, this market virtually is kind of untradeable. Okay. Again, if you go back and look at these short-term charts, what are you seeing? You've got straight consolidation. You have very little movement in any given market right now. And these are just 8 futures products: gold, notes, euro currency, crude oil, and the 4 major indices. There's very little movement here. So where am I going to find an edge for myself? Remember, the trading market, trading is about locating and finding an edge for your opportunity. And I think that it becomes a very difficult challenge when there's not enough activity or movement in markets to trade. We would much rather see wild, crazy trading back and forth, okay, because that gives us a greater opportunity. When you trade in a market like this that is offering very little opportunity, what you're really doing is you're putting your whole day basically on one trade or 2 trades, which is not really what we want to do if you're actively trading. Again, there's a difference between the others, and the other is to sell in the bigger markets and just sell some premium. Again, there will be a time when we'll become much more aggressive, but right now this is not the time for us to want to be aggressive, because we don't get those kinds of opportunities right now. Okay. And I hope that makes sense to everybody. You can always ask questions if you're not sure what I'm talking about. But again, you look at how slow and how narrow the trading days have been for I don't know, for months. Okay. Very narrow trading days are much more challenging than when the days get wider. Okay. And that's something that you have to keep into consideration when you trade, because you're paying a premium if you're trading in the optional world. If you're trading in the futures market, you're still giving up either the bid or the offer. So you have to be very, very careful, okay? Because again, money is money, okay? And it costs to trade, okay? Everything has got cost to it. So if you're getting yourself too active in this market that is not offering you an opportunity to be active, why would you want to get involved, okay? So gold would have been a potential sale. It did not have enough volume, so it would not be a trade for me. I would need to see volume in gold on a 4-minute cycle up about here. Okay, it's not even anywhere near. Okay, the euro currency, I need volume to be somewhere up around here. Okay, and so without the volume, it doesn't give me the opportunity. So the trade that I'm watching right now is based on price and volume, and I'm getting neither. Okay, I'm getting some price movement without the volume. So I'm not going to trade in, because remember, you're trading off of other people's emotions. Okay. You're trading, the world of trading is competitive. Okay. It's a competitive business. Now we can all make money in this competition, but those who give in too quickly don't make money, because they're always on the wrong side of the market. And I think it's important to understand how to try to get to the right side of the market. Now, it looks like we might be getting a potential trade in crude oil. So I'm going to go back down there right now and see. Okay, now this could be close. I'd like to see the volume reach up to here, and I would be willing to potentially look at it. I don't know if it's going to get there. Okay, now I could take this trade. It is a riskier trade because I do not have enough emotion in the volume to trade it. So I'm going to go ahead and pass, most likely, okay, unless there's some big order shows up. But this is close. And if I were really busy right now, I would take this trade in addition. And there's things that you look at that you can take in addition when there are more opportunities. Remember, the more opportunities you have, the more action and the more opportunity you have to get out of a bad trade, okay, and into good trades. When there's a lack of action, you're banking on one trade or two trades to make your money. Okay, so that's why we go back to now selling premium, because the markets, the short-term markets, are not active enough for me to want to trade, and I don't think they should be active enough for you to want to trade. So why would you want to, overextend yourself, okay, in these markets, okay, and at the end of the day, okay, this is what the whole business comes down to. It is a business of putting yourself in the highest amount of probability of a trade to make. And let's just see if there's anything developing down here. I can see some dropping. I just don't see volume to support it. So it's not giving me what I'd want or opportunity to step in and play right now. Okay, because again, there's no volume, so there's no interest, which means there's no emotion. There's nobody chasing it. As we used to say on the trading floor, I can't see anybody's tonsils. So why would I want to get overly active here? Okay, that is always the thing that I want you to be aware of, is the activity in the markets will determine if there's trade for you to make. And I'm sure we could probably find something tradable, but I don't want to look that hard. Okay, I want to watch the same stuff over and over again, because all charts work the same. And I know what I have has got good liquidity. I know what I have has good action. So why would I want to try to find other things that don't give me the same opportunity? And I think when you learn that, I think you'll find yourself a lot happier. Okay. See, crude, if we would have sold it here, it's still going up. So I would be now chasing it. Okay. And, we just don't have enough opportunities here. So I think the message for today should be, look, be careful. There's no reason for you to get overly active here. Manage your risk very carefully. I think that we went through the oversold and the overbought markets. Those are the markets you want to trade right now on a very short-term basis to pick up. If you trade a 5 lot, a couple $100. Okay, if you trade a 1 lot, $50, $60. Again, it doesn't matter. The size does not matter, because our whole process is to grow and try to grow organically. Is try to make money so that we can trade bigger size and continue to make money trading bigger size. Okay, versus trying to get it all at one time. I think that's very important for you to understand. And I think if you do those things, you'll be much happier. And we will see you back here on Thursday with Trading with Bubba. Thanks so much for stopping by. And you can always ask questions here or whatever, and make sure you subscribe. And we'll see you later, everybody. Have a great day. Adios.